In today's video, we're going to have a quick look at the polls between President Trump and Joe Biden. We're also going to be looking at what's going on with the Reserve Bank of Australia and the Victorian situation when it comes to the Australian recovery from a recession. Hello and welcome to another ACY Securities Market Update. My name is Alistair Schultz and I'm going to be your host through today's trading journey. The first thing I'm looking at today is about the polls, and at the moment they are leading towards Joe. But right now there is a lot of questions and a lot of placement coming up right now for what is happening on Wall Street and what they're thinking about the situation as a whole. Democrats are actually seeking to reform the banking, hedge funds and private equity firms across the board, which naturally impacts a lot of Wall Street. So with 3 months to go, it could actually be anyone's president. And right now, Wall Street is weighing up who is going to be the better leader for them and how are they going to benefit from it. Unfortunately, it looks like it would actually be President Trump when it comes to that side of things, but I kind of feel like they don't want a repeat offender in terms of a president again when it comes to that. Now, enough about the US presidency. I think there's still too much time ahead for us to really know what's going to happen, and there could be anything that happens down the track. Having a look today at some earnings that we're going to be seeing from this season, the first one of the ones that I'm looking at today is Hyatt Hotels Corporation. And this is not something that's unexpected, but considering the aviation and the hotel and holiday industry at the moment, their share price is sitting at $47.98. Now before that, they were well above $50 and before the pandemic. However, they have reported that revenue has fallen 89%. And they've also reported a loss of about $183 million. And that includes in the time of them trying to minimize the amount of expenses that they have and obviously selling off some of their portfolio. So right now the portfolio with Hyatt Hotels really does skew towards that full service accommodation, meaning all those places where you would go and get the buffet breakfast and you get your room made up while you're having breakfast. So they are really in that more service side of the hotel industry, and that means that they are actually dependent on large groups of people, they're on corporate travel, and of course on sort of fundraisers and holiday travel as well. They're expecting small groups to large groups of people to be coming in and taking advantage of not only the room, but the service themselves. Now, they have said that they have enough cash to survive the next 36 months, but the only way that they've been able to do so is actually by staff layoffs and reducing their services across the board, meaning that they don't actually need to get the hotel rooms cleaned because there's really no one there staying to need to get one done. So it is an interesting factor to have a look at this. Even if we think about the idea of what's happened with COVID-19 and people having to go into the hotels and getting some government payments to the hotel group, that still doesn't improve the situation for them. And it is going to be a tough slog, especially with the airline industry also struggling at the moment. Now, moving on a little bit further and a little bit closer to home for me, Australia's recession is likely to deepen. We have expectations right now for another quarter to have a contraction on GDP. We've already seen the first quarter drop by 0.3%, the 7% drop in the second quarter as expected, and right now we're expecting a 4 to 5% contraction in the third quarter. Now that forecast has come a little bit early, but considering we know that for at least another 6 weeks, Victoria is going to be in a state of serious lockdown with stage 4 lockdowns occurring, the effects are likely to ripple across the rest of the states and, of course, across the rest of Australia with supply chain disruptions, small businesses going under, and, of course, the banking industry as well, because we've seen mortgages and home loans and credit cards being stalled out or at least deferred on payments. Then we are going to see those banks with the highest exposure in Victoria likely to have a problem. And so far, even just at the news of the drop down of lockdowns again, we've seen some banking entities drop by about 4% in their share prices. Now, the other one to look out for today is we have a cash rate announcement due out at 2:30 p.m. Australian Eastern Standard Time. I'm not expecting them to do any changes. I am instead looking to see what they're going to be doing in the Friday monetary policy report. Now, it's there that I expect to see some changes happening, though it could be a little bit uncertain. A lot of the data that the RBA deals with is a little bit older, and it may not account for what's happening in the Victorian situation. So that is why the report on Friday is going to be a little bit more important than usual and is likely to be the one that we expect to read a lot from coming out through the 2020 year from the RBA. Now, looking at the news ahead of today, there's really only the cash rate statements for Australia. Everything else is a low impact event with some things from Canada, some things from the UK, and a little bit from Europe as well. So keep an eye on some of those tonight. It is a quiet day for news, But the big ones are really, again, around that cash rate statement. So let's keep an eye and make sure they don't drop those rates just in case. Now, if there's anything from today's video, perhaps one of my AusBiz appearances this morning, or some of the other things that I might do throughout the week in content, then please feel free to shoot me an email about your question to talktoal@acy.com. And don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.